Okay, welcome to the first video in a three-part series I'm going to create about trading in financial markets. Now the nice thing about financial markets is that modern financial markets, they basically have the same basic principles that apply to all of them. The interface could be different, the asset you're trading could be different, but the basic idea, the basic principles of how it works are going to be basically the same. So that's what I'm going to cover in these videos. It's going to be pretty basic for people that already know how to trade. So this is more designed for people that are just starting, just want to learn, or just has barely created their account and funded their account and don't quite know exactly how to place their first order yet. That's what this video is targeted. That's who it's targeted to. So the three topics I'm going to cover are what the order book is and what the bid-ask spread is, how to read a chart, particularly candlestick charts, and the different order types. I'm just going to cover the two basic ones, the market and the limit order. There's multiple other ones, but I'll just go over the basics. And in that last video, I'll actually place a trade to show you how it's done. So let's start with the order book and the bid-ask spread. So as you can see here, I've pulled up a website called BitFinex. This is a market for cryptocurrency. I pulled up the market for Bitcoin using US dollars. So this here, these little lines and these numbers going up and down, this is the order book. And what the order book is, it's a representation of at different price points, how many people are willing to buy the asset, which is Bitcoin here, or on the right side, how many people are willing to sell. So as you can see, it starts from really low on the buy side, which we call a bid, and then it goes up. So right here on the top, 5,200, that's the highest price that anyone is willing to buy Bitcoin right now on this market. And then the opposite side, on the right side, it goes from high to low. And at the top it meets in the middle. This is the lowest price that anyone's willing to sell. So 5300 is this is called the ask. If someone's selling, it's ask. If someone's buying, it's bid. So right here, the highest bid is 5,200 and the lowest ask is 5,300. So let me show you another example here. This is just an image of how it would look. This is more like a horizontal view, so the price is on this side, the low price, high price up here. So as you go up, these green lines are people willing to buy. These are bids. And then the red are people willing to sell. These are asks. So the lowest ask price is if you were going to buy right away, you would take whatever that person is offering, and you would match with them. And then the opposite is true is if you want to sell right away, you would take the highest bid and you'd sell to that person and you would match, and that trade would happen. Now the space in between where nothing's happening is called the bid-ask spread. So sometimes things happen in the middle there, and someone might place a bid or ask right in the middle really quick, and then it gets taken away because they have a better offer than everyone else. And it's something that's constantly changing. So anyways, that's the basic idea. The bid is what people are willing to buy at, and the ask is what people are willing to sell at. And the space in between is the bid-ask spread. So if we go back to this view, the bid-ask spread here is, let me zoom in a little. Oh, whoop, the wrong way. Yeah, because that rounded it, so let's zoom in even more. Yeah, this is the closest precision, whoops, we have. So the last view we had kind of grouped it, rounded it off. This gives you the actual price. So the actual price is 5,285.9 for the bid, and then the ask is 5,286. So the actual bid-ask spread is only 10 cents in this current market, which means it's a very liquid market. And as you can see now that we're zoomed in with the graphic here, it's changing pretty fast. That means people are actually, placing new orders, taking orders off, and things are actually, trades are actually happening. See how the bid changed now? You'll see the ask change too. Those are actually because trades are actually happening. So that's a basic example of the bid-ask spread and the order book. Thanks for watching.